You've built equity in your home. What's the smartest way to put that equity to work?
Two tools, very different outcomes. Most people pick the wrong one, not because they're wrong, but because nobody walked them through what each tool is exactly designed to do.
Before we get into the comparison, why is this conversation so important for homeowners right now?
Because a lot of homeowners who bought 2, 3, 4 years ago have built significant equity, sometimes 100,000, 200,000, even more, and they don't know what to do with it. It's just sitting there. And here's the thing about equity that nobody says out loud. If your equity's sitting still, it's actually going backwards. Inflation is real, and money that isn't working has a cost. At the same time, using equity incorrectly or using the wrong tool can create a financial stress. So the conversation matters. This is about helping people make strategic decisions, not just a tactical one.
What's the biggest misconception people have about these two tools?
The biggest misconception is that they're basically the same thing. They're not. People hear cash out, refi, and HELOC and assume it's just two ways to get cash out of your house. The mechanisms are completely different, the risk profiles are different, and the right choice depends heavily on what you're trying to accomplish and your current financial situation. A cash out refinance replaces your existing mortgage with a new, larger mortgage. You get the difference in cash, and you have one payment, one rate. A HELOC, or home equity line of credit, is a second lien on your home. It doesn't touch your first mortgage. It works more like a credit card secured to your house. So you have a draw period where you can borrow up to the limit, and then a repayment period. Same house, same equity, very different financial tools.
When does each one make more sense? Walk us through the decision framework.
Cash out refinance makes more sense when your current mortgage rate is close to today's rate, so replacing it doesn't hurt that much. Or when you want the certainty of a fixed payment on a large amount, or when you're planning to use a significant portion of your equity for a major renovation, a business investment, buying a rental property outright. On the other hand, a HELOC makes more sense when you have a great rate on your existing mortgage that you don't want to touch. Or when you're not sure exactly how much you'll need, because a HELOC is flexible, you draw what you need when you need it. Also, when you need access to funds over time rather than all at once, that's a good reason for the HELOC. Here's the key distinction. If you're protecting a good first mortgage and needing flexibility, HELOC. If you want simplicity, one payment, and you're okay with refinancing, cash out. If rates have moved significantly since you bought, do the math carefully before refinancing.
Can you give me a real example of each? One client who used cash out and one who used a HELOC.
Sure. Client 1, couple in the early 40s, bought their home in 2019, had built about $180,000 in equity. Their rate on their first mortgage was 3.2%. They wanted to buy a rental property. A cash out refinance would have meant replacing their 3.2% mortgage with a 7% interest rate mortgage. That doesn't work. The monthly payment increase on their primary home would have eaten the rental property's cash flow entirely. So we did a HELOC instead. They drew $60,000 for the down payment on the rental. They kept their original mortgage untouched, and as a result, the rental property cash flows. The HELOC balance is being paid down by the rental property income. Client 2 is a different situation. Bought in 2022, the rate was 6.75%. They had about $90,000 in equity. They wanted to fund a major kitchen and bathroom renovation to sell their home at a premium. The current rates were actually slightly lower than their original rates. So we did a cash out refinance, pulled out $85,000, did the renovation, and sold the home 6 months later for $140,000 more than their original purchase price. Same tool, cash out, made sense because of the original rate wasn't worth protecting.
What do most people miss when they're evaluating this decision?
The purpose of the money matters enormously, and most people don't start there. If you're going to use the equity for something that generates a return, a rental property, a business investment, the cost of the debt should be weighed against the return you expect from that investment. That's a wealth-building conversation. If we're using it for something that doesn't generate a return, a boat, vacation, general consumption, that's a very different calculation. The equity tool doesn't change, but the wisdom of accessing it all changes significantly. And the third thing people miss is tax implications. Mortgage interest deductibility depends on how the funds are used. If you're using a cash out or a HELOC for investment purposes, there may be deductibility. If it's personal, there may not. You need to talk to your CPA before you close.
What's the biggest mistake people make with equity decisions?
Yeah, so it's treating it like free money. It's not free. It has a cost, the interest rate on whatever product you use, and it has a risk. Your home secures the debt, and if the plan doesn't work, the home is on the line. I'm not saying don't use your equity. I think strategic use of equity is one of the most powerful wealth building tools homeowners have. But I have equity, should I use it for something that's not strategic? I have equity, here's the return I expect, here's how it fits in my financial plan, and here's the tool that makes the most sense. That's a strategy.
For someone who wants to evaluate their equity situation, what do they do today?
Yeah, 3 steps. First, know your numbers. What's your current mortgage balance? What's your home worth today? The difference is your equity. Find out exactly what you have to work with. Second, define the purpose. What do you want to use the equity for? Write it down. Is it investment, a renovation, something else? The purpose should drive the tool choice. And third, model both scenarios. What does the cash out refinance look like in terms of new payment and rate? What does the HELOC look like in terms of draw period and repayment? Run both numbers before you decide.
And if someone wants help running those scenarios for their specific situation?
Yeah, that's something we do all day for our clients. I would say take the 3-minute home loan quiz on my website. There's a specific path for homeowners looking at equity. I'll review your situation and come back with a recommendation. Or schedule a consultation, and we'll look at your current mortgage, your equity, your goals, and figure out which tool makes sense, or whether accessing equity makes sense at all right now. It's not a generic answer for your situation.